Today, we're going to dig into a really detailed investment analysis on Iris Clothing. Now, the report we're looking at argues this company is at a major turning point. We're going to walk through all the signals it highlights, from the market charts to the financial numbers and what the company has planned for the future.
Okay, before we dive in, we've got to get the important stuff out of the way. Just a quick reminder that this entire breakdown is for educational and learning purposes only. This is absolutely not financial advice, so please make sure you talk to a registered financial advisor before you make any investment decisions. Right, with that said, let's get into it.
Okay, so what's the big idea here? The whole argument in this report is really built on three key pillars. First, you've got bullish technicals. That's basically what the stock chart is doing. Second, accelerating fundamentals, which gets into the health of the actual business. And third, clear growth catalysts, the stuff that could really propel the company forward. We're going to tackle each one of these.
So, let's start with that first pillar. What are the signals from the market telling us according to this analysis? What is the chart actually saying?
Well, first off, the report points to what it calls a classic technical uptrend. The analysis shows the stock has been consistently making higher highs and it's staying above its key moving averages. Think of those as smoothed-out price lines that help you see the trend's direction. For a lot of traders, this is a really clear sign of strength.
Now check this out, because this is all about the volume. The analysis really emphasizes that the buying volume, the number of shares being traded, recently surged to 2.46 times its average. I mean, that's not just a small move. The report argues this suggests some real conviction from serious market participants.
And this idea of strong momentum gets backed up by the RSI indicator you see here. The report notes it's in a bullish sweet spot. It's showing that buyers are in control, but it's not super overbought, which could signal that a pullback is coming. So strong, but not overheated.
Okay, so according to the source, the charts look strong. But what about the company's actual performance? I mean, charts are one thing, but the business itself has to be solid, right? So let's move on to the fundamentals and see how this story builds. And this is where the fundamental case really kicks off, with accelerating growth. The source shows that year-over-year revenue growth more than doubled, jumping from just 8% all the way to 20%. The report sees this as a huge sign that whatever the company is doing, well, it's starting to work.
But what's really important is that this growth is also profitable. The report points to industry-leading EBITDA margins of over 19%. Basically, for every dollar of sales, the company is keeping a really healthy chunk as operating profit. That's a great sign of how efficient they are.
Now, digging into the company's financial health, the analysis highlights three key things. First, they have strong liquidity, meaning they have more than double the assets needed to cover their short-term bills. Second, their debt is well under control. And third, they're using their capital efficiently, which you can see from that solid return on equity. Altogether, it paints a picture of a really sound company.
A strong foundation is great, but the analysis argues the future potential is even more compelling. This is where the story gets really interesting. Let's look at the growth catalyst the report is pointing to.
The biggest engine here is a massive, and this is important, fully funded 3.6 times expansion in how much they can produce. As this timeline shows, the plan is to go from making 33,000 pieces a day to a whopping 120,000. That is a huge leap in their potential. And they're not just planning to make more of the same stuff. The report highlights that they're expanding into new, potentially higher margin categories. We're talking about things like premium infant gift sets, winter sportswear. Each one is designed to capture a whole new slice of the market.
So, to sell all these new products, the analysis points to a rapidly expanding distribution network. You can actually see their footprint growing on this map. Their distributor count has surged, and they have this huge target of 500 exclusive brand outlets, up from just 6 right now.
So, look, while this growth story is super compelling, no investment comes without risk. A good analysis has to look at both sides, and the report is very clear about what investors should be watching out for.
Here, the analysis identifies the key risks. You've got the risk of delays in building those new factories, pressure on profits if new product costs are high, increased competition from bigger players, and of course, the challenge of just managing everything during such rapid growth. These are definitely real-world hurdles.
And that leads us to the central question of the whole report, doesn't it? How does the source balance this incredible potential against these very real risks?
The report's conclusion is visualized perfectly right here. It basically argues that the combined weight of the technical momentum, the proven financial strength, and those clear future catalysts, It all substantially outweighs what it calls manageable execution-based risks. And this brings us to the source's final conclusion. The main recommendation is a buy for medium to long-term investors, but it suggests a strategic plan to accumulate shares on any price pullbacks, rather than chasing the stock after it's already run up. So there you have it, a complete breakdown of the investment thesis on IRIS Clothings, all based on the source analysis. This analysis came from the team at Multibagger. So if you found this breakdown valuable, you can follow them for more content just like this. And as always, don't forget to hit that bell icon to stay updated.